What's up guys, Ben here and welcome to Motivation to Invest. Investing into the stock market is increasing massively in popularity, especially among millennials and the growing middle class. This is due to a variety of factors, one of the main ones being the abundance of free trading apps such as Trading 212 and Robinhood in the US. However, this ease of investing into the stock market now comes with many risks, especially due to the crazy retail investor who thinks that investing into the stock market is just too easy. So in this video, I'm going to reveal the main dangers you should look out for when investing into the stock market in this new age of the crazy retail investor who thinks investing into stocks is nothing more than gambling.
Many of the top stocks on Robinhood have seen triple-digit returns in the past month, while some Wall Street veterans were left on the sidelines. Robinhood CEO Vlad Tenev saying at a virtual conference last week they were seeing a lot of buying of industries hit by the pandemic, including airlines, hotels, and casinos. A lot of those names have come roaring back. Take a look. The top names on Robinhood in the past month: children's media company Genius Brands. That was up more than 700% for the month of May. The airline's also a top trade, with American Airlines jumping 100%. Robinhood and major brokerage firms have seen record new accounts open this year. In some cases, these first-time traders are beating Wall Street legends and billionaire hedge fund managers.
CNBC's Jim Cramer thinks Wall Street professionals are taking advantage of the amateur investor.
What do you make of this Hertz news? The idea that Hertz, basically a bankrupt company, is now asking the judge if it can sell $1 billion worth of stock. Would you buy that stock?
It's kind of funny when you think about it, Andrew, if it weren't like people actually going to lose a lot of money. It's bankrupt.
Is there any way for that to work out favorably for the shareholder?
Is there any way? Well, maybe a sudden surge of rental, they undo the bankruptcy, maybe the common stock is worth something in the redo. If it weren't securities, let's say it was Monopoly, let's say it was DraftKings, and I happen to like DraftKings, it would be so much fun, wouldn't it? I mean, you pick a couple of stocks, you gut them in the morning, and then you hope people are stupid enough, they buy them. It doesn't even matter. Like, America wasn't even down when they came out, which was far worse than what I was looking for. But it's a different world now, Andrew, and you and I, we're relics. So I'm going to call you a triceratops. Like, maybe I'm a stegosaurus. What do you think? Hey, we did rule the world for a while.
But here's the thing. We always wanted to democratize the market. We always wanted more, quote, retail investors to want to get into the market and to be able to benefit from it. And now we have people in it, and I'm worried. I know I'm a professional worrier, but I'm worried.
Well, Andrew, I think you should be worried for people who do think that there's something great going on in the airlines right now. How about Carnival? Think if there's anything great going on in Carnival. The Cunard, last news about Carnival's, the Cunard line's not sale until November 1, the Queen Mary 2. But, you know, see, here's what you're handicapped by. You're doing homework. I heard you say you talk to CEOs. What the heck is that about with you talking to CEOs? I want to democratize. You can't talk to any CEOs. What do you think of that?
Jim, you and I, we think alike. You're much smarter than I am, but we do think alike.
I'm just trying to get a dinner invite over at your house.
Cramer thinks these Wall Street professionals are playing a game with the amateur Robinhood investors. He thinks they are pumping up the stock in the morning and then waiting for the others to jump on the bandwagon and then selling off hard. This is dangerous and you need to watch out for these types of stocks. So what is going on? In this video, we're going to find out as I dive into the Hertz Stock boom, which was a bankrupt company which increased by over 300%. Be sure to watch this video to the end to find out how you can be a wolf of Wall Street and not another sheep in the herd. With that being said, let's dive in.
Coming in, flex, I just wanna win.
Welcome back guys to Motivation to Invest. Before we get started, it would really mean a lot to me if you guys could smash that like button. That helps out with the YouTube algorithm, which allows us to continue creating more great content like this for you guys. In addition, if you would like some exclusive stock market investing tips and stock market picks, which I personally have invested into, then you should definitely think about subscribing to this channel. Be sure to turn the notification bell on. That way you'll get notified when a great stock is at a great price and I am investing into it. So with that being said, let's get into the video. So what are the dangers with this rising popularity in stock investing? Well, there are a variety of dangers due to this increasing new breed of investors. Many of these retail investors tend to think that investing into the stock market is the same as gambling.
Sir, you're aware that there's a $50,000 buy-in this evening?
If that's the case, give me $100,000 in chips. Let me have a Diet Pepsi and some hot wings.
100,000.
Come on,
Give them the chips.
let's play. Woo, I'm gonna get some of this money.
They think you don't have to research companies, you don't have to actually understand the financials of businesses, and you could just simply a guessing game where you invest into a business and either you win or you lose, like being in the casino at Vegas. This brings me neatly onto danger number 2, and that is the increasing rise in share prices of bankrupt stocks. This is crazy. I've seen so many stocks of companies which have actually bankrupt have their share prices skyrocket in recent weeks. A major example is Hertz, which recently declared for Chapter 11 bankruptcy, and even the great investor Carl Icahn sold all Hertz stock at a $2 billion loss. However, this didn't stop many retail investors buying massive amounts of Hertz shares, causing the stock price to inflate. The stock surged by over 352% in just a few days. So who was buying this bankrupt stock? Retail investors, of course, most notably Robinhood Traders.
And some of these day traders are not afraid to take a victory lap on Twitter. Take CEO of Barstool Sports Dave Portnoy, who recently picked up day trading, calling out Warren Buffett for unloading airline stocks too soon. Portnoy says he made $300,000 in a day on the airlines. Guys?
Hey, it's so interesting because we were just talking about how at the lows, it was a lot of Main Street that was buying the market while Wall Street was selling. And it feels like, they were betting on America. They had some more conviction that we were going to get through this. When I look at the frenzy of activity lately, I just wonder, is it too much of a good thing? There are some say, it's the fault of Robinhood and these other places for cutting commissions to zero. But we've seen this before. I mean, we saw that huge move in Virgin Galactic and some of the stocks earlier this year before the market tanked. Now we have Luckin Coffee and Nikola and all of these new kind of cult stocks. It just feels frothy, doesn't it?
According to RobinTrack, a website that tracks Robinhood's data, Hertz was number 2 on the popularity chart. Now, this type of bankruptcy doesn't mean the business is completely destroyed. However, it does mean that the business debt requires restructuring and many assets may have to be sold off. However, this also means that stock investors will be last on the list to recoup any losses, should the company completely fail. In the worst case scenario, stock investors are last on the list to receive anything from the company after all its assets are sold off to pay its debts. They'll be behind bondholders, debt collectors, and even lawyers collecting hefty legal fees. But that's not all. The company's stock could actually become worthless as its share price is diluted. The stock would then be relisted as a brand new penny stock. Any shareholders who invested into the original stock would lose their entire investment. Now, some people may say, wait, Ben, we are investing into a company in the hope that it may turn around in the future. Isn't that value investing or contrarian investing? And I will say to them, no. Contrarian investing and value investing is you spotted a great company which is going through temporarily tough times. You've checked the balance sheet, you see it's got good levels of cash flow, you see it's got low debt, you see it can survive and it will survive. Whereas these speculative investors are investing in companies which are already declared bankruptcy. That's the madness that we're going through in the stock market. I believe this time will go down in history as one of the craziest times ever in the stock market. You have smart but ruthless traders, I will call them the wolves. They will begin to buy shares in bankrupt companies. Then the herd, I will call them the sheep or the retail investors, will see these shares being purchased. They will think they're missing out, they'll think it's a great deal, they'll go in and buy more. The share price will inflate. This will be the top of the bubble. Then the traders and the wolves will sell fast. They'll sell. This bubble will pop and all those retail investors will lose all their money. And it's a terrible situation for them to be in. So how can you protect yourself from this madness and herd mentality? Well, the simple way to protect yourself is by sticking to investing fundamentals which have been proven over time to work. That is only investing into exceptional companies. Invest into companies with great management, with a competitive advantage. Invest over the long term. Invest into great companies which you know are going to survive in 20, 30, 40 years' time. That is the way that you win in this game. Don't fall for the value traps or the complete speculations unless you've got a portion of your cash to one side, which you're happy to lose completely. In the words of the great Warren Buffett, it's better to buy a great company at a fair price than a fair company at a great price. You should avoid herd mentality. You should be an independent thinker and always check businesses have low levels of debt. Now, if you wish to learn more, I have a variety of investing videos on this channel, such as those explaining qualitative and quantitative investing. So you can check those out on the link below and you can get learning some reliable stock investing information. So what risks do you think this herd mentality and gambling in the stock market is bringing to the average investor? Comment your thoughts below and I'll join in the discussion. In addition, if you enjoyed this video, go ahead, smash that like button for the YouTube algorithm. That allows us to continue creating more great content like this for you guys. In addition, if you would like more investing tips and exclusive stock market picks, which I personally have invested into, then you should definitely subscribe to this channel. If you enjoyed this video, you should also check out the video I did on Jay-Z and his top 7 investments, which made him hip-hop's first ever billionaire. Thanks for watching, guys, and I'll see you next time.
Coming in, flex. I just wanna win, LABB who we running with, coming in, flex. I just wanna win,